Hi there, guys. Hope you guys are well. Welcome back to my channel. Basically, in this video, guys, I just want to take you through how to trade bull and bear traps and how to actually follow the market makers. But before we do that, guys, just quickly take the time to like the video and also subscribe to the channel. Please, that'll really help me out with the algorithm. But yeah, guys. So basically, most of what you're watching on YouTube, you'll see that it's got a lot to do with basic trading, retail trading concepts like you'll find supply and demand, you'll find indicators, and you'll find moving averages and all basic, like using the RSI and all this stuff. But basically, in this video, I just want to take you through how how I trade bull and bear traps and how it's insanely profitable and how you can capitalize on major moves. So basically, in the next video, I'm also going to take you guys how to use this tool right here. This big move to the upside. I actually capitalize on this major move to the upside with this tool over here. So as you can see, it pinpointed the bottom of this move, or it pinpointed the bottom of the pullback. So in the next video, please like and subscribe, and I'm going to show you guys exactly how to use this tool right over here. But this strategy alone is insanely profitable, and you can make a ton of money just trading bull and bear traps. So firstly, guys, on the hourly time frame, we want to identify the trend. So I'm talking about, let me just, this move over here. From here, I managed to capitalize on this move from here to the upside. So I just want to show you guys how I actually did that. Just remove that. Okay, so first of all, you want to identify a trend, a very strong trend to the upside. So in this case, we would have identified the trend to the upside just like this. Now, what you want to do is, as you know, most retail traders are basically losing money in the markets. And if you think about it, why do you lose money? It's because you're constantly trying to trade like reversals. So a lot of retail traders would have actually looked at this and saw this as a reversal to the downside. So we can see sorry, I just want to include this. We can see the weak bearish candles, but we can also see the stochastic is getting overbought. So as retail traders see the stochastic is getting overbought and they start shorting the market based on the stochastic and based on this weak bearish, based on these weak bearish candles. So that's also part of the concept that you need to pay attention to with this strategy. Okay, so the reason behind this strategy, or the whole concept behind the strategy, is you got to, a big thing that retail traders don't do is they don't study their losses. So they'll take a short based on this. The market will push up, but they won't study into why that happened. So basically, if we look at this structure over here, it's basically a bear trap. So what you got to do is basically you got to identify your trend on the uptrend. You got to see, are we in a steep downtrend or are we in a steep uptrend? All right. So in this case, we are in a steep uptrend. So looking at this, I would have seen these, well, basically I saw these two candles. It happened over here as well. So let me just show you guys. So it happened here. It happened here. And it happens multiple times. You can also see it happened here. So this is, just in this move to the upside, retail traders would have gone short here, and short here. I'm just going to show you guys how I capitalize on this one here in the middle. Okay, so basically on the hourly time frame, you've got to identify weak reversal candlesticks. So we can see over here, these candlesticks are not the strongest. They're pretty weak going to the downside. Okay, so first determine that we're in a strong trend. In this case, it's to the upside. Then you identify weak reversal candlesticks. Sometimes they can also look strong, but it's better to identify them. Like if you look at this candle over here, you can see it's quite weak. We can see a wick to the downside. Even this candle here, we can see it's quite weak. But with this, in this case, we can see a pin bar to the upside, and we can see this isn't that strong. These wicks on these candles to the downside are quite weak. So what we'll then do is we'll drop down to, let's just highlight this price action right over here. Now let's drop down to the 15 minute. Okay, so basically what we will do is we'll drop down to the 15 minute. In this case, I actually dropped down to the 5 minute. Okay, but in this case, you can see I like to use the stochastic as well with this in this concept. So with this concept, obviously, what market makers are doing is you can see liquidity. There's a lot of money to the upside here. So there's a ton of actual money. It's just so right over here, there are a ton of stop losses, and you must understand that the market makers can't move. They can't move the market to the upside without grabbing liquidity from retail traders, because just above here, there are literally billions or trillions of dollars of retail money going to the downside, right? Probably billions, not trillions. So you got to identify, okay, we're getting weak reversal candles, and we can see retail traders on the lower time frames and stuff. There's a ton of liquidity on the 15 minute and the 5 minute. This over here is clearly going to be most likely going to be a trap. Okay, so identify your liquidity to the upside in this example. So what we're going to look for is reversal candlestick patterns. So let me just drop down to the 5 minute time frame. Okay, so I've dropped down to the 5 minute time frame. Now what I was looking for here was, I marked out my liquidity and all that, as I said before, above here. Let me just bring it lower down. Okay, so I use the stochastic. I've got a 1233 standard stochastic. The inputs, I've got it as 1233. Sometimes I use an 1133, but I like to use this 1233. And I've got a 90 level and a 10 level. Okay, so this is just your standard stochastic that you can get from the indicators. So just have your settings like this on it. Okay, so then basically what I do is we've identified this move to the downside from here to here would be that weak reversal candlestick, or there were two of them and they were looking weak. Okay, so what it is market makers are trapping retail traders to the downside. So let's actually leave it there. So what I did was, when I saw this bullish pin bar here on the 15 minute, on the 5 minute, and I also saw my stochastic was coming from, it went below the 10 level, and now it made a crossover and it was coming back above the 10 level after this candlestick closed. All right, so that was basically signaling to me that the market makers it was just a fake out to the downside. So this here is basically a bear trap, and now the market makers are going to shift the market higher. So as you can see here, the market makers, what I actually did was I set a buy limit right over here. So like you'll see that a lot of retail traders will enter like here at the close of, for example, this pin bar. But that's the wrong way to do it. If you want to get better risk to reward, you must put a buy limit and wait for a pullback. Okay, so my buy limit was roughly around here, or a little bit higher actually. Okay, so what that's going to do is it's going to allow your stop loss to be really tight. So now you can see the stop loss in terms of distance is going to be really tight compared to like if you're entering at the high of this candle. So it does make a difference to have limit orders lower down. All right. So basically I entered there. I was looking at my stochastic for a crossover and for my stochastic to move back above the 10 and go back into this, back above the 10 and start moving upwards. So I got tagged into this long position right over here. It was pretty insane. And what you target is just above the high. You can see roughly my risk to reward was pretty much like this. You can see that, so this was like a 1 to 3.5, 1 to 4 risk to reward. Let me just move that across. Yeah. roughly about like that. Now, as you can see, when liquidity was, let me just remove this. Now you can see all the money was sitting above here. So you'll notice that when all these retail traders got stopped out, all their stops were sitting above here. You can see the shift in this candle. You can see this is market makers generating liquidity to the upside. You can see how strong that candle was. All that is the market makers are triggering all the stops, and the market just starts flying to the upside. So as I said before, I'd be targeting, just above the liquidity. So after this candle had closed, I closed out 80% of my position and I left a little bit to run. And yeah, I ended up pulling out roughly about here on that 20% that I'd left on the table. So that's just one example right over there. Let's just go back to this. Let's just identify another one that happens on downtrends and on uptrends. But let's just look at this candle right over here. Okay, so let's drop down to our 15-minute. Okay, so we can see this was a fake move to the downside. So this was another bear trap. So it's the exact same concept. We can see money is sitting up here. So we can see a ton of money is sitting up here. Now let's drop down to the 5-minute. So then what did I look for? I knew that money and liquidity was sitting up here. I dropped down to the 5-minute. I waited for the stochastic to drop below the 10 level and come back up once I saw this green pin bar over here. So always wait for the hourly candles to close. So after this, we can see here this was at 14, so 2 o'clock this candle closed. Okay, so I waited, then I saw this pin bar right over here. Okay, then I put a limit order around here, buy limit for tight risk to reward. I also saw the stochastic making a crossover. And then I got in here and I wrote it up. And as you can see here, when all these stop losses were triggered, you can see the big shift to the upside. You can see market makers were grabbing liquidity from retail traders, and now the market starts shifting to the upside. So you bank most of your profits when it reaches just above the high of the stop losses, and then you can leave a little bit on the table to run for a runner to the upside. So guys, this is quite a simple strategy that even a little 10-year-old would probably understand. So I hope you guys have learned something from this video. If you find my information valuable, because I find a lot of YouTubers don't actually give anybody real information into the markets and how to look into the markets properly and identify, they don't go over key concepts on how to actually make money and how to read the market makers' patterns. You got to understand the context of the market and how the market makers actually move. Like in a bear example, you can see here you can see over here, so you'll see these fake candles to the upside, and it's just you got to drop down to the lower time frame. So identify weak candles to the upside, like in this case a weak candle to the upside. Over here, these are all weak candles to the upside. Wait for those candles to close, drop down to a lower time frame, and look for continuation to the downside. So this is a bull trap. So as I said, identify your trend to the downside and then start looking for these traps. So look at your hourly candles, look for weak hourly candles, and then drop down either to your 15-minute or your 5-minute. Use the stochastic and price action, and then look for those continuations to the downside in a bear case. Or in a bull case, you can see over here, weak candles to the downside, bear traps. It just happens all the time, guys, all the time. But first, you got to identify that strong move to the ups, strong hourly move. So monitor your the move on the hourly time frame. Don't monitor the move on the 15-minute or the 30-minute or 5-minute. Always monitor price action on a particular day on the hourly time frame. And then look for your, because if you think about this move over here, a lot of retail traders would be petrified to actually short this market. Not to short the market, a lot of retail traders would be petrified to actually go long and join in on this move. So most retail traders are greedy and they want to catch the tops and bottoms. So a lot of them would have gone short here, gone short here, gone short here. But not a lot of retail. When retail traders see these strong moves to the upside, they get very scared, very nervous to actually join in. And the market makers, this move has all been planned out and they know exactly where they're going. And you've got to find ways of joining them instead of going against them. It's just that simple, guys. So I hope if you found some value in this video, please leave a like, please share, please comment, please subscribe. And in the next video, I'm going to show you guys how to use this little tool over here to actually catch insane retracement moves in the market that you can capitalize on. So let's learn some real trading concepts and forget about retail trading concepts. Let's forget about stupid indicators, supply and demand. And let's actually trade in the direction of the market makers, because that's how I make money. That's how you're going to make money. And this is how we can actually turn trading into a reality instead of it being a place where we come and lose money. Peace, guys. Chat. I'll see you guys in the next video. Peace out.